How's everybody doing?
Great.
All right.
Looking at a trade for doing a butterfly spread, an iron butterfly on NTR Nutrien, just to see how earnings went. And I didn't pull the trigger, and it would have been beautiful, but oh well. I kept a tab on it just because I was like, I want to see how this would have played out if I had taken it. And now, of course, I wish I had taken it, but I don't know, because it basically just didn't move on earnings at all, just stayed put, which is unlikely. But I'm liking short-term butterflies over earnings when they have, I've got some specific criteria that I'm using for it, but it's been interesting. It's worked out more often than I thought it would.
Awesome. Well, we're right at the top of the hour, so let's kick things off here. Welcome our Zoom friends, the behind the house all access pass friends. Welcome to those that are joining on YouTube. We're glad that you guys are here. It's time for the weekly Trade Smart Trading Show. You just heard about the trade that wasn't. It was a great idea it was just a great idea, and it was. We've got the one, the only Stock Landers here. Stock is most clearly the favorite among everybody at TradeSmart, and we all just love him. And of course, Chris Burgess, the one, the only. Glad you guys are here today. If you've got questions in Zoom, you can go ahead and ask them. If you got questions on YouTube, you can go ahead and ask them. We are going to bias towards our Zoom friends. Those are the All Access Pass members here at TradeSmart University, and we're glad to take any of the questions that you have. We're going to change things up a little bit today. We are going to start off with a brief market update. I guess we can do rock, paper, scissors to see which one's going to do that. We didn't decide that ahead of time. Probably should be Scott, because he's been flipping right about everything for the last 2 weeks, and it's making me a little bit angry. And then I asked everybody in the presenter side of the equation here to bring a stock that they thought might be a good trade idea. So we're going to have a trade-a-palooza today, and probably what's going to happen is we'll each submit a stock, and everybody will tell us why it's a terrible idea. Because that's just how this world is. We all like to dogpile on everybody's ideas, but that's okay. I don't care. So Scott, since you've been so darn accurate on this market, I'm just nominating you to be the market update presenter.
All right. So, hey everybody, hope everyone's doing good. It's good to see everybody here.
Accurate, I might say, almost like you have a insider.
It's annoying sometimes, isn't it? It's just. There's so that zero. Hang on, there's
I'll teach you what my grandfather says. He says it's not bragging if you can do it. And I say, yes, grandfather, it is actually still bragging, but you've earned the right to brag.
That 0 point turn worked out really well down there. This yellow line up here, this golden line, I should say, right here, guys. It's this harkens back to something when I did it for the Trader Traction Group. I guess we went back to basically March when this was generated. So that 0 point turn at the bottom of the screen way down here, that's all stuff they teach, or I'm teaching them in the forecasting aspect. In fact, we just started on a little bit of that yesterday. That yellow line, gold line right there in the middle of the screen, right here, that's the problem child here. And it's been the problem child from when actually we did when the market fell apart 5 deviations, when Josh and I were talking back then. We're right back at that same place, guys. Hitting some resistance. This is a trouble spot. We'll see how the market handles this. Short-term trades, whatever, the way I teach them to do the swings and traction. If you were on a 60-minute time frame and just that cycle of time only right now, we got to figure out how they deal with this as far as the short side to it. If we were using the swings as a reason to signal short, it hasn't triggered that yet. That's the bottom line of that. So for what that's worth, I do want to do 2 more things on this while we're here, and then I'll pass it back. I want to go to the monthly. Okay. And we've had this conversation in the past, guys. Again, 5 waves up, 3 waves down. The way I teach that in traction, that's not Elliott wave. Got to the middle of this, that little fib zone midpoint, we're kind of bouncing off of it. What I'm curious to see is how we handle if we can break through and get back into this zone, are right along that 434, 435, 436. You know, it's like an elevator. The closer you get to stopping, it slows down, or you come to a traffic light. But I don't know that we get there. That's not a macro call. It's just if we do down the road in the future, at some point, you got to pay attention to it. But so far, the market's behaving about like it should. I think one more thing, I'll just draw this out just briefly. If you look and you think about running between fibs, okay, if you can imagine that this is a fib channel here and this arrow is another fib channel, just like those sections, you start ping pong, you start zigzagging back and forth with these things until the structure sets up. I'm telling y'all that not necessarily just with this chart. I'm saying that as you trade or you invest your dollars, be thinking about that. Look at where the middle of that range might be. That 50 fib retracement might show up, not only when you're going from high to low, but when you're running on a slope as well. So just things to think about going forward as the market works through this. The last thing I'll add to this, there's a lot, where is this? Go back to here. There are a lot of people, a lot of really, really smart money. I actually sent Josh a snippet the other day talking about how trapped a lot of pros got. A lot of people, a lot of Elliott Wave people got really hurt through here. And I'm not knocking Elliott Wave. I'm just saying some things I've seen sent to me. Got hurt through here thinking the market had to pull back, had to come to this level where it could do this. Again, that's what your stops are for. The biggest thing I think that got people hurt was their beliefs over their discipline. And if you're going to take anything I've said today with any value, it's your beliefs of what you think should happen and the discipline to do what you should when your beliefs and price action don't match. After doing this for almost 4 decades, that's the most sage thing I can tell all of you, because I've watched a lot of people, I've heard a lot of stories who've gotten really hurt because they refuse to take a stop. And that's brutal. Needless loss. You know, if you look at the way Josh, you know, normally showing y'all, he gets his 1R, he's boom, he's out, growing that account. If he gets stopped out, he gets stopped out. But if you're going to learn a lesson from what a lot of people didn't seem to grasp, that is one I have seen over and over regurgitated through different people I know, even some social media stuff I've seen. So I hope that helps. So that's kind of where we sit right now. We're just testing resistance. I'll pass back off to Josh or Chris.
Hey, go back to your monthly chart, because I've been wanting to ask this question for the last couple of weeks. And by the way, if you're new to the show, you know, go back and watch the last 2, even 3 weeks, heck, maybe even a month of presentations. And Scott has just been freakishly on. It's amazing, really. But do you just bring a presupposition that it's a 3-wave retracement until it shows you otherwise? Because if you look back to like 2007, it ended up being a 5-wave down,
right?
Turned into like I don't know if you call it a motive wave or what you would call it in your training, but you know, how do you know that it's a 3 versus a 5, or you just assume it's a retracement until it's not?
So if you know, this is a great question, guys, that he's asking, Josh is bringing up. What was the conditional state in 07 versus this? What was a slope? Okay. And when you think about this, I'm not just looking at the wave count. I'm looking at a market structure. So in this case, I've got channels, right? You know, I think we've done this in YouTube somewhere in the past couple of months. I may have shown how we did this just using 2 pivot structures to create this one channel from just 2 points. Okay. That's how I created this whole monster. It's been pretty accurate, but, it's not just the wave count. It's also in context of slope, the channel. It's not just that as in isolation. You're using more than one item to determine that information. And then you're looking at it and then the speed at which it moves. I mean, my traction traders, if you're around, they'll all tell you, whether it's Traction Pro or regular traction, how much do I hammer about slope? And then I demonstrate whether it's the coffee and cash version of, want to gap up? Well, I should look at this. Yesterday it was Sophie coming out of a small base. 3 different non-correlated updraft gap systems I teach between Traction Pro, and they all uncorrelated said the same thing. And it was a good day for that stock yesterday. I'm trying to answer Josh's question about this. It's not just the wave count. It is in the context of having framed that price structure in a bigger macro way. If we get time, I may show something for us all over with, but it's not necessarily this, but it's the way they do framing. But to answer his question, 5 waves up, 3 waves down, that caught my attention. That's been discussed by me through the traction groups and all that. And then looking at the slope and then realizing the angle of momentum, the angle of inclination is just too sharp. And as we talked about, if this was a day trade, if you guys were looking at this move to here and you go to a 5-minute chart, most of you saying, I'll buy that. But because the psychology of what's been put in the media and what you're hearing in the bear market, and it's not, those things are not truth. The stock market is going to discount roughly 6 months out in advance. So what are they thinking? Where are we going to be in 6 months? And again, you've had such a strong sell-off. And then if you go to counter ranges, which one of my fund managers said, you nailed it. You pulled right back on the ES, right back on the S&P, the top of the J&J counter range, which we have taught how many times here through TSU now, and right on top of it, and boom, it's been just absolutely beautiful. In fact, hang on, I know I'm hogging, I don't mean to, guys. Hang on 1 second. Right here. This is worth just pause. So this is what one of my fund managers sent me. He said they're head faking it here, right? That's the fight. So if you don't know calendar ranges, guys, this is January and July. This is July range. It takes 10 days to establish. You take 10 divided by 2. That means you need 5 days above or below to confirm the breakout. You have that. So as it's running up, 1, 2, 3, 4, pulling back to the top of the J&J range where the institutions set the levels, boom, confirm, and then Powell jams the market with everything. One more place I am looking on all of these. I'll just use ES. Roughly that 4207. That's the 5-day confirmation breakdown of January. So you should expect to see the institutions play around somewhere 4205, 4206, 4207. And the same thing is going to hold true because every other major market, S&P, QQQ, IW, and diamonds, mid caps, they all look like this. They all look the exact same behavior. In fact, the weakest of the 4 was the Qs when it pulled in. But even then, you've had 6 months down. This brings up one thing with Josh's question. What else do I look at? I look at a time relationship, just like we like Fibonacci's. How many are you doing Fibonacci counts? Okay, well, the same thing's true. You've got to square price and time. You've got to equalize it. If you go study Gann, most of you would, if you study Gann, you know where I'm coming from. If you don't, that's okay. If you've gone up for 12 months, what are the odds you're going to retrace for at least 3? There's a correlation there. If you're going to go 1 bar in a trend, you should go at least 3, not 2, but 3. In theory, you should. There's just some very common mathematical things that play out, just like fibs occur naturally, as Josh will always remind you guys of universally in our world around us, the shape of our face, right? There's other things like this as well. So that also plays back into his question. I didn't mean to dovetail that hard, but it's just the market's being a gift. The volatility is a gift for a lot of you, unless you don't like volatility. I came into this year saying it's a trading year, not arrogantly, just like that was my expectation. I could easily be wrong, but it's been a trading year. And most of your people who are used to buy and hold are trading a lot more actively than positioning. And people get irritated when they hear that, but that's the market you have. If you like to play cards, you trade the hand you're dealt. Does that help? I went way too long, guys, but I hope that's helpful.
Yeah, it's very helpful. The only thing I will add, because I think that's all genius, I'm going to steal this. I posted in Discord yesterday, for those of you that are in TSU, this is an interesting picture. This is the semiconductor index, and there's a thinking process out there that as the semis go, so go the rest of the market, because semiconductors, if you're not familiar, are the little pieces of electronics that are in every freaking thing that we own today. These lights that are turned on have semiconductors in them. Your computer, of course, your car, everywhere. And so they've permeated almost every sector, probably every sector that's out there. And we can get an idea of if we've got tailwinds or headwinds based on the semiconductors. And so I posted this downward channel and said, this is an interesting pivot point to keep an eye on. And, if it doesn't hold, it could give us some insight into where we're going in the future. And it did not hold. And we're pressing onwards and upwards fairly aggressively today as well. So there's still a lot of hours left in the trading day. Turn my tablet on. So a candle that looks like this could easily end up looking like that. and then we'd be having a different story. So I'm not saying go out and bet the farm on this right here, but I'm saying keep an eye on the semiconductor index, and the S&P similarly is just breaking out of its trend. I too was looking at this resistance over here. If I can draw a semi-straight line, so we're right around that. I'll put the actual cursor over it, just pushing on up to it. So I wouldn't be surprised to see a little stalling there. But we may look back in hindsight and say this was the bottom, there was the retesting, and now we're going up, and that's great for all the retirement accounts, and I'm happy for that. Chris, do you have anything else, just broadly speaking, about the market? And if not, and if you have a trade idea, you could be the first one to launch us into that.
Well, I'll do my market update later today for people on YouTube. But yeah, I mean, obviously it's not wildly different from what you guys are looking at either. I am curious, when you're looking in those channels, if you guys have a different criteria for, when we have a breakout or not. Like, I'm always looking for 2 closes outside of the channel. Is that pretty much what you're looking for too? You were talking about, if it had closed back inside that channel on semiconductors, so we have 1 close outside the channel. Are you looking for 2, 3? Do you have different criteria you look at?
Yeah, that's a great question. I've never specified it to that degree. So I guess the first closeout is what I've done by default. But that's an interesting expansion on that thinking process.
The way I teach is a 3-bar reversal from outside. So 1 bar out, 2nd bar, and 3. So I'll just show this because I teach this all the time, and I have for, well, as long in the public domains. This is not new. Cannot. So I'll just do it like this. So imagine, guys, that you've had to sell off the bottom of the channel just to get through this. And I'm just going to draw this like these are candlestick bars right here. I get they're not perfect and all that. That's not the point. So you close out 1, you set another one outside. Okay, something like that. And you get 1 more after that. Now, is it a perfect science? Of course not. But that's what I'm usually looking for, because what you will find, and my background of actually how I got educating people, this was part of the piece of the puzzle for solving people's problems. You close out, you stay out. If you're back within 3, okay, odds are you're going to see the algos come in and start pushing it back up and try to recover that. Again, pay attention to the slope. If my slope into this is negative, well, like what Josh is showing you, I want to be on that down slope coming out. You get that 3-bar reversal, pay attention, because a lot of times they'll either go up, or if it's a down slope, they'll bring it down clearly. But I really want 3 bars. Now, on a monthly chart, that's a long time. That's a whole quarter, right? On a 5-minute chart, you're talking, I mean, I know you guys can do the math here, but a lot of traders get really impatient. And even once you have that 3 bars, if you will pay attention, not that way, Scott. If you will then pay attention to, let's just say this is the low and the high of that range. And again, I'm not putting shadows or wicks or tails on it. But then if you'll watch that and watch how price reacts to that in the future, you have a pretty good idea. The other part of that is to pay attention to the midpoint of that 3-bar range outside. Little subtleties, guys, when you're trying to figure out if you want to push, if it's not really clear. Sometimes, guys, they come in so sharp, they just punch and come right back up like a J hook. Other times they meander around. That's why slope is so important. But yes, I am looking, and when I come out of something like he's showing such a steep slope down, I'd not be surprised to see it come back down a little bit and force it down. Like you've hit it, it wants to come out, then they pull back, then they come back out. Just one more example, because this may help put this in context. If you guys look at the green line over here, okay, so you get 1 bar, 2 bar, 3 bar, and this thing just hangs. That's a pretty steep slope right here, that green line, right? Look at the slope up. That vertical slope, guys, needs time to work that off. So it's not just, oh, if I just know your 3-bar reversal, Scott, it's solved. It's not that simple sometimes. It's a minimum standard versus opposed to this is ideally how it's going to happen every time. And that's just one more way of thinking about this for what it's worth. But that's going to catch my attention. If I come back inside of a legit channel, then I'm going to start watching. This is one of the reasons one of my managers will tell you I dealt with. and even everybody's been through Trader Traction so far has seen this in the past. This is how I knew we're starting to turn. This is what's called raindrops. We're not going to get into that here because it's not part of this, but this is why I started looking for the turns. And so then Traction Pro Group can tell you with regression, the way I teach regression, what we're discussing back through here. Like everything is starting to lean in that direction. And you could see it. If you're just patient, you'll let the charts come to you as opposed to you trying to force price. Anyway, I hope that helps, but I know it's long-winded again, but I'm trying to give you guys context of how I look at things.
Mm-hmm. Cool. I do have a trade if you want me to kick
Please.
things off. So I shared
Love
this
it.
on Discord a little bit ago. Let me go ahead and get my screen share going. Wunderbar. Okay, so this is Visa. So interestingly, let's take a look at SPY real quick just to kind of follow up on what these guys have been talking about. So obviously we've got the market kind of just hanging out. Haven't quite been able to break above that 415 level yet. Obviously lots of resistance here. So if this gets rejected, this will obviously help bearish trades quite a bit. If we break out, bearish trades are going to suffer. So this being a bearish trade, just keep that in mind, right? If we break through this 415 and we end up heading back up to 420, breaking out above that, then bearish trades are going to suffer. So stop losses, of course, are going to be important. That being said, Visa's been in a nice little kind of bearish channel here for months and months and months, pretty much the whole year, as you can see here. And we basically have a nice entry point right here for a bearish trade within this channel. So a couple of things that I like about this. One, obviously we're sitting right at the top of the channel, which means we've got an opportunity to go back down. Other things I like about it, they just had earnings last week, and the reaction to earnings has been very mixed. So as you can see, huge candle. So earnings were after market, so this is the next day. Big range, but ultimately closing pretty much right where it opened. And then ever since then, it hasn't been, a strong trend one way or the other since earnings. It's been just kind of all over the place. Went up a little bit, went down a little bit. Now we're back up. We're basically right back at the top of the channel. So this tells me that the market is a little conflicted with the earnings. I'm not sure what they want to do with Visa, right? It's not a strong reaction to earnings. And because of that, I think the default for most people then is just to go back to what it was doing before. And that was this going back and forth inside of a range here. So what I like here is a bear put spread. So essentially buying puts on Visa. And I've been looking at buying the 215 puts and selling the 195s. I think that gets us most of the way to the bottom of the channel here. We don't have to be greedy and try to, bottom tick this at like 190 or something like that. 195 gets us close enough with the time decay and all of that. So that's a spread I like. A reason that I like that is better than just buying puts or just shorting shares is if you're wrong and the stock does go up here. Again, I'm looking for 2, you can do 3 closes above this channel would be essentially my stop loss on this if we're wrong. One of the reasons I like a bear put spread on this rather than just buying puts or shorting the stock is because the short contract down here at 195 or wherever you choose to place your target is going to help you if this goes wrong, right? It's going to help cushion that blow quite a bit. So we take a look at this right now. So I've put together this on the September options. So giving ourselves about a month and a half worth of time, because if you take a look, how long does it actually take for this thing to go? It's not happening in a week or 2, right? This is a longer swing here. So sometimes, we get down halfway to the channel and then we chop around a little bit and then we make it down there. Sometimes, that one it got there in a week, sure, but that's clearly not what's happening here, right? So we want to give this more time than we need. We're trading options. We always want more time than we need. So going out to September expiration out here, I think is plenty of time. So that's why I've structured it this way. So just looking at buying the 215, and then I'm looking at selling the 195s. You can choose a different short strike if you like, but that basically creates this structure here where I'm paying 5.5, call it 6, depending on where you get in, about $6 in order to make a $20 spread. So that's more than a 3-to-1 return on that, which is obviously quite nice. So we can get in for a little under 600 with the potential to make a little under 1,500 per spread, right, per contract. So those of you with smaller accounts, you can do this with $600 of risk. Those of you with larger accounts, just multiply this by 10 or whatever. And so what I like about that, obviously, if things go wrong against us, that short strike is going to help soften the blow, right? If all we had was the long put here, then as it goes against us, you've got time decay working against you, you've got delta working against you and all of that. And by turning this into a spread, it just softens that out quite a bit. You can see even if we get up to 220, I'm really not losing that much. I'm down $170. Obviously that's one day, so add a little time decay to that. You might lose $2, $3, $4 on this, but you're not losing the whole $6 on this trade, even if it goes fairly high against you. So I like that put spread quite a bit. I think we've got a nice entry point here. Again, if the market turns bullish, obviously you're probably going to get stopped out of this trade. Another reason I like doing it in the spread. But yeah, if we get the downside there, you've got more than a 3-to-1 return on that. If you have a larger account, so probably I would say over 10,000 as a minimum, depending on how how you like to structure things, you can do this as a diagonal spread as well, meaning you buy the puts out to September. I'm looking at the 215 puts. You can buy further in the money if you want, or out of the money. But you would want to buy those further out and then sell weekly puts against that for every week that it's not dropping. And that will, if you hold on to this trade through September, you could get out for break even or even a profit, even if the stock goes completely against you, but you are kind of limiting your downside. You are taking a little bit more risk up front. So a couple different ways to structure that. I like just the regular vertical put spread in September, but you could do a diagonal spread with this as well. Take a bit more capital. So those of you with smaller accounts, probably not going to be an option for you. But that's a trade that I like, that I've been looking at. So let me know your thoughts.
I think it's a perfect time to remind people. That was amazing. And Chris is going to be sharing a bunch of those option type strategies in a boot camp as part of the TSU IPO. Have you all heard about the IPO? It stands for not initial public offering, but indicators, trading plans, and option strategies, option training. So keep an eye out for emails about the IPO. And if you want to jump in and learn all those fancy techniques, which are amazing, Chris is the guy to do it, as you can see. It's a very cool trade. My chart looked a little bit different. We're very much in the same place. It's funny, we had seen the same thing here. I'll snag my Zoom. Oh, Zoom. Bless your heart. There we go. I got a new thing. The Zoom people will see it. It's called a Stream Deck, and I can now just push a button. I don't have, literally Zoom made me go out and buy $100 glorified mouse because I can't find their stupid buttons when we're teaching these classes. But yeah, here's what my channel looked like. Very similar, not quite as much room, or I had a little bit more room up. Chris's was down here a little bit closer. So anyway, just as an alternative, it might run up a smidgen higher than you guys were expecting if you were just looking at the one chart, but we're very much seeing the same picture. I think your bottom line was descending a little bit too.
Mm-hmm. Yeah, you've still got pretty much the same target though, right around 195-ish.
Yep, exactly. 100%. It's a great trade.
Yeah, if it does go down, I mean, it might go below that. You can see, there's a couple of candles where it does tick below there, but I wouldn't be aiming for that. I think that's getting greedy. And there's that old slang, the pigs get fat and the hogs get slaughtered. So
Johnny in Zoom says, it looks like a Morningstar pattern. I'll field this unless one of you guys feel strongly about that. And I would be cautious maybe calling it a Morningstar pattern. I guess it depends on the perspective you look at it. If you say it's generally trending down, then it would potentially be a Morningstar pattern, which happens at the bottom of a downtrend. But I think the more recent trend has been up, and this looks like a little bit of a retracement. Again, the Morningstar being a reversal pattern. So we can't really reverse from this little retracement. It would be more of a continuation. So the shape looks correct, Johnny. I think the location and the meaning is maybe not that. This is well, if you combine these candles, this would be more of a morning star pattern where we've come down to support and we're starting the new trend up. Or here's another version over here. Any other questions, or anybody want to dog pile?
Can I steal the screen back real quick?
Yeah.
There's actually one part of the analysis that I forgot to share. The third part of this that I really like as well is that there's a squeeze forming. So we have the potential for a larger than expected move. For those of you that are unfamiliar with the TTM squeeze indicator or the squeeze in general, it basically is just a moment of compressed volatility. So technically, it's when the two standard deviation Bollinger Bands are within the 1.5 ATR Keltner channels. So you can plot that on any graph, even if you don't have the TTM squeeze indicator. But the indicator here just tells us with these red dots real quick that it's in a squeeze without having to clutter up our charts. So that's the other thing I like there, is that we are seeing compressed volatility, which is interesting given the size of the candle today. But we have some pretty large candles here over the last couple of weeks. So that's probably why the ATR is quite expanded right now. So when this happens, right, when we have a squeeze here, we have the potential for fairly large moves. And that's what I'm hoping we get here, is a large move to the downside. So we'll see what happens, but that was the last piece that I wanted to add in.
Bonus for the TTM squeeze. That is a really cool strategy. Chris has been trading this. I've got another buddy, Taylor, that I'm excited to introduce you guys to in the fall here. Taylor, Chris can vouch. He crushes that TTM squeeze strategy that Chris taught y'all a few months ago. And it's not unusual to see multi 5-figure days in a row from him. It's pretty impressive. All right. I'm going to submit my trade, and then we'll let Scott show us all up at the tail end here. I've been picking on you, Scott. I'm really not picking on you. I just think that you're certifiably a genius. So it's not meant with any amount of sarcasm at all. I mean, it's really all right. So this is a little bit of a proud dad moment, and we'll see where this goes from here. But many of you guys know Josiah, my middle son, and he funded his account with real money, I don't know, coming up on a month ago. And just side note, I mean, because we can, and I have control of the screen, he's killing it with Starbucks right now. He got into Starbucks yesterday, and it's up here. He's got a target up at 90. So he keeps me well briefed on his Starbucks trade, but he's also in an AT&T trade. And as I was thinking what I might bring to today's session, going back just again to qualify as Chris did, I feel like we're at a major pivot point here in the market, and the probability that could go up and the probability that it could go down, in my estimation, is nearly 50-50, at least for a short-term trade. So to Chris's point, extreme bullishness or extreme bearishness in the market could pull these trades either way. And so that's why I like AT&T here, because it's sitting at a pivot point. If we come and grab from the gap here over, I need to change that so it doesn't go to the right. We're sitting right on a pivot. So if AT&T fails and comes down through this pivot point, a target down here about 1725 is certainly within reason, which is about a 4.5% move, I believe. Did I do that math right in my head? 5%, just over 5%. Not bad on a pretty inexpensive stock. So you can get into this, not necessarily have to accumulate a huge position, although you should always be position sizing to your R. Like there's no, like, I don't like the market, or I do, there's no allotment for that. You should be position sizing correctly. But then on the upside here, you may have a little hump getting over this resistance area. But AT&T has definitely enjoyed trading up in this range more so than down here. You got to go back quite a ways, going to a weekly chart now. You got to go back quite a ways here to 2008 is the last time it was down much below where we're at right now. So I'm not saying it can't go lower. Obviously, Enron can always go lower, but I'm just saying a pretty solid value stock on sale right now is AT&T, especially when not long ago it was trading up in the $30 range pre-COVID. I see the COVID crash. So after COVID, $24 range. That's a lot of upside potential. So, to bring some strategy into this, because Chris did, and I just need to feel almost as cool as him. It's not going to be as cool. I mean, let's just be candid right now. You can't beat his debit spread that he shared with you guys. But one thing you could consider doing is, if we get a bounce up off from support, you could just start buying into this sucker. And there's a few ways you may consider that. It's cheap enough, and so you don't have to have a humongous account. You could sell some naked puts. And a naked put is the terrible idea unless you want to own the shares. And so if you're unfamiliar with puts, what you do when you sell a put option is you're giving somebody the right to put you the stocks, to give you the stocks at a certain price. So if you felt like $18.50 is a pretty good price to pay for AT&T, you can sell a naked put and somebody can sell you the stocks for $18.50. Now, why would they do that? Well, if it's trading down here at $18.31, if it's trading up here at $18.50, let's say 60, right? They are, I had it right the first time. See, this is why Chris teaches his options. They're going to put you the stock at a more expensive value than it's currently trading at. So you end up paying $18.50 when you could have paid $18.27 or so. And, the question is, am I in this for the long haul or not? So you collect a premium when you sell the option. You may or may not get the shares, but if you're happy to pay $18.50, then you're happy to pay $18.50. And as it goes on up, you can turn right around and then sell what's called a covered call. And covered call is kind of the inverse of that. You're giving somebody the right to buy the stocks from you at a certain price. And so as long as you got the stocks on hand, then there's really no additional requirements in your account. You just give them the shares that you already owned. So you could sell a covered call up here at $19. You bought it $8.50. You sell it $19. You put 50 cents. I just learned this. So somebody told me, Taylor, my friend Taylor, I was talking to him on the phone yesterday. He's like, Josh, you say cash in your jeans. And I say, he says, get a little green. He's like, I think we should join forces and just say green in your jeans. And I'm like, done. It is now green in your jeans. So you can put a little green in your jeans, 50-cent spread there between those two, or just keep owning it and collecting dividends on it and keep outrunning this thing with covered calls. So there's actually 4 ways using this methodology that you can get paid for the stock. The naked put, then you buy the stock when you get put the stock, which hopefully goes up. Then you can sell the covered call, and then you can collect dividends on this kind of a stock. So you can get paid 4 times to own the same stock, which is pretty cool. Now, you're not going to get rich on the naked put or the covered calls, but you do that over time, and it adds 1%, 2%, 3% to your trade, and it makes it worthwhile. So this is a great pivot trade. We used to call these bracket trades back in the day. We haven't called them that recently, but that's really what it is. It's if AT&T bounces, I see a lot of upside potential, and if it fails, I see some, not quite as much, but I see some downside potential there as well. So any questions on that particular trade idea? Let me see what Johnny's saying in here.
He's talking about gold. I'm going to look at a gold chart whenever we get.
Oh, cool.
I'm not.
Perfect.
Well, I'll address because I've seen his questions. So
let me go see YouTube. If you're on YouTube, you can ask questions. Looks like we just got a couple over there right now. If you have a question after YouTube, you can just type it in the comments pane, and we'll do our best to answer that. Hopefully it can be answered via text chat, or if you're on our TSU Discord, you can join there as well. So anyway, that's my offering. And Josiah owns AT&T shares, so I'm secretly hoping that it goes up for him, but we've got to stop there and he can switch directions if it falls below support. So go Jojo if you're listening in on this. All right, Scott, I'll pass it over to you.
I'm going to come at this a little. So, Johnny, I know I'm not trading gold. I've got clients I deal with that, full disclosure, do have positions in it, but that doesn't mean that I do. So I'm starting with a monthly, guys, bear with me. I'm going to do something a little different and show y'all some stuff here as we go through this and sets up some things that I think may bring value from what we're trying to accomplish here. So with gold, this is not that deep of a retrace. It is consolidating at a high level. So where would I look for something to happen with this potentially in a bigger macro picture? It's going to be right about here. Okay. That is a longer term play. So basically what, the 1350, you're like, Scott, I'm not waiting for that. You know, I get that, but I'm trying to give you guys context. If we get back to the 135.07 area, 135 and change, give or take, that will get my attention. All right, now bear with me as we go through this. That's really long term, right? That doesn't help you in the short term. So let's drop down to a daily. Let's do the exact same thing. Where's trouble coming on the way back? If we get this. So now I'm looking at 179.43 as a problem zone. Okay. So that gives you at least a feel of kind of what you can look for on this down the road. My issue with gold, and again, or GLD in general, just the way it trades, I look at GLD or anything in that arena as a more longer term play. So I'll make sure we address that for you so you see it. If it can get to the 179, 180 region and it can hold through here, right? Now I'm gonna be aiming for that 186 number. Okay. There'll be some bumps and bruises through here, just so you know, more than likely, barring, you know, a black swan event, I'd be looking at these levels right here, you know, as some problem zones in there, and of course the middle of that range as well, kind of like a fib, a middle of the fib. So there's that. If I want to take this a little shorter term, so you guys get a sense of this. Okay. Start watching the ones, just call it 170. That's where I expect to see some issues through that on that. Now let me take this to a different level for everybody.
Wait, what is this black magic that you're doing with
I can't tell you that. This is how I've run my newsletter for years. This is how I've had people make, well, I won't even go there. Just bear with me. So this is the S&P, long-term, daily, okay? So you can see the channel structure on here, and I've deleted several things and for different reasons to keep this clean. If you will look, if you'll just, y'all can screenshot this, or if you're looking at this video later, you can go back and look at this. This did exactly what it was supposed to do back here. And I say, oh, it's in hindsight. No, actually the way this code's written, when this came back to this cyan line, the expectation is the stock should go short there. Now, what I'm about to say, I want everybody to be really clear. I'm going to show you if we don't make a new high. In other words, if we did not make a new high from where we are in the most recent bars, and if we do, then this is going to shift and adjust. But pretend for just a second that we don't go make a new high and we pull back. Okay. So I'm not saying that's what's going to happen. I'm saying we didn't. Then I need to pay attention if we can get back to the 381 level, and I treat that as support. And if it fails through that level, I don't mean breaches it. If it fails through, now you're aiming for 369.38. These are longer term scenarios. If price moves higher, I would have to adjust that clearly. And if somebody, you know, the answer to that in the future, you know, reach out, whatever TSU, and I will gladly send you an updated level. What I'm doing is I'm now doing very symmetrically what Wall Street likes to do, or at least their traders like to do. You understand opening range, the 30-minute opening range, right? The reason I like it is symmetrical opportunity above the range or below the range to trade. I am doing the same thing for you here by giving you frames above and below. So I'm giving you guys long-term play levels to deal with and how to think this through. So as I do this, bear with me here. So I'm telling you what to pay attention to for down here. If we depend, again, the speed at which we fall makes a difference. What are the odds we're coming back to here tomorrow in the next few days? I don't think they're very high, you know, anything could happen. But once we start to chew higher, I mean, if we do or we don't, I'm still going to expect to have a challenge against this cyan line right here. And if you're trying to connect that, just basically take the January 422 high, I don't know, and connect it maybe somewhere close to 328. You guys can kind of get a sense of what this is running through right here. And I'm just trying to help you mimic this a little bit. But I expect, so if I look at this, I do what's called scoping. not a complicated concept. Take a vertical line. Let's just say tomorrow's price level right here, horizontal. Well, and I put like a little rifle scope around it. It's called scoping. What's that price? 416.10. Okay, we do this all the time in coffee and cash, right? So that gives me a rough level on that channel structure to pay attention to. Okay, that gives me a level tomorrow morning on a Friday after we have news in the morning, whatever, then pay attention to. Is that resistance, give or take around it? Possibly. Am I running to recent highs like we've talked about? Yes. Have we stretched one wave, two wave, three waves? You're on fourth. Are we get one more wave before it rolls over? Or is it going to continue to push? I don't know. But if it does, mark 422.56, give or take, guys, 430-ish and change, then you're 450. If I chew through the 422, that means kind of start to close through and fall through, then I expect to see 430. If I can get to that 430 number, if I can get through that, then the next place I'm looking for is really the 450. With that, it doesn't mean I'm not looking left. Price has, remember, you've all heard that a zillion times from us. Now I'm going to look at that 438 problem. That's simple. And then if we really did chew the 450, now I'm maybe looking for a 475 and change. It's not my opinion. I know how they're looking for. I know the logic of these boxes is if you can chew through and get through them, then you're trying to go the high of that next box. That's the whole point. If you chew through 380 and change on this side, the whole point is you're trying to get to 369 and change, give or take. Okay, and that's kind of loose. I'm going to show you one more thing with this while we're here. This is Amazon. I've marked it up. Amazon's come up because somebody mentioned to me, one of our programmers mentioned to me, said, did you see Amazon? I said, what? And they said, you see the island? I was like, crap, no, I didn't. And there it is. You got an island reversal. This had been a few days ago, whatever. You have an island reversal. You understand what an island is? That's that space right here. Gaps down, bases, gaps back above, and it leaves a space in between here. It's classic textbook island reversal. Like this is it right through here. There's space, right? Where things haven't filled in. You haven't touched. Very classic, right? Why am I telling you this? Because it's a bullish formation for Wall Street. Well, if they continue to drive, if I was scoping this to tomorrow, this would be about 149, I don't know, 149.45, and then a few more days down, you can kind of see it drops, I don't know, in 50-cent increments. If we get to the 150s and we get rejected, okay, it pulls back against the slope. But if it starts to chew through here, you got a couple places here, and then 167. These are longer term setups for all of you. Okay, if this interests you, we have to wait till it gets there for it would do. Now, this is not as tangible. This concept works on any time frame. Like I can do this on any fractal, monthlies, 5 minutes, tick data. But I'm trying to leave you guys with things. So if somebody's watching YouTube in a week, they can look at these levels, or in a month, some of these levels may still have value for you. But that's the logic behind it. So I hope
Where's that teal line come from?
Yeah, that one's driven from the algorithm in a geometric format. Sorry.
Shared, you can't tell you.
It's yeah, Scott's like I can tell you, but I have to kill you.
Pretty much. Yeah. This has been this took a lot of programming to get right over the years. And this is how when I used to do the newsletters on Sundays, this is exactly what I put out. And I had a couple people do, well, they were always free on Sundays. I put 2 stocks out, then I had the regular newsletter, and I'd have people just pick up on the freebies. And I had a couple people pull 50K, 100K trades, but they were longer term daily chart trades where they were getting in something much like what Josh took advantage of in the 079 collapse. You had a really great bear trend in a stock or bull trend. But as you get to each step or each level, either coming up or down, you're left the decision. You want to take some off, or you want to let it see if it'll fall through the next level. So that's how these are generated. I've deleted some stuff off just to keep this clean for everybody. So you just have the levels. So if you take screenshots, you have your levels, you can play with this. Amazon is watched because it's a canary in the coal mine stock, because it represents, like Walmart, the US consumer, right? That's a big deal. But that is a bullish, island reversal type play.
Mm-hmm.
It doesn't make me permabull. If I do what Josh loves to do, and I like as well, I just don't talk about that much, is this right here. And you can kind of see, paying attention to your fib zone inside of here. Just keep that in mind as you go forward, guys. Okay. Remember, you need bases, you need compressions, as Chris is pointing out. You want those squeeze, you want to cool energy. Put a slinky in your hand, twist one end really tight, or rubber band, and what happens if you let go? It uncools. You need that energy out of these things. Okay, it's just that straightforward. So I hope that helps. If somebody's got a stock that we throw up here and I'll mark it up really quick, feel free to throw that in here, and then I'll.
Yeah, let's do that. And great find on the island reversal. I had not caught that either.
Oh, it was my programmer. It mentioned to me, and I wasn't even looking at Amazon. He said, "Have you seen the island reversal?" I said, "What?" And I was like, "Oh, well, that I just wasn't."
Why don't
really
we invite
focused.
your programmer to come on the show?
No, we don't want to do that. No, we don't want to do that at all. But I was glad he showed it to me. He mentioned it's for one of our clients, and I was just
It's
like,
also a pretty clear W pattern there as well.
"Yep, sure is." It's, if you like to play at the Amazon and it's not $3,000 a share anymore, and they're just as
Right.
volatile as it's been because they've split this thing down. And that does bring this up for anybody who's newer to trading, or maybe you just don't know this. Guys, realize when they start splitting stocks down, the volatility is going to subside with those. So you're like, oh, great, it's so much cheaper. It's great, I'll trade it. But the volatility, the more they split it, the less volatile, the more stable, and the more blue chip it becomes. It's not as growth. It's not going to accelerate as much. So if you're used to Amazon's being wild swings for you intraday, it's not going to be that way. Just like this happened with Microsoft back in the 90s when they split Lord knows how many times. So it's the same thing. If you're new to trading and you don't know that, and a stock gets split and it was a go-go name, especially technologies, just be aware that if you go in expecting after the split, it's going to be as hyper or volatile.
It also
Loose.
brings in a whole different personality. Like if you get used to trading one stock, when they change the price, it just brings in a different group of traders. And so
Yep.
the personality of the stock changes.
Yep. So Lucid looks like this. Okay. And I just, so if you guys ever see me, see these charts posted in Discord or wherever, just so you have a quick sense. See the initial pullback to this? Again, this is all geometrically marked out like it sees it. And I'm showing you this because you can see where it's really struggled right here. Well, Scott, it got here, it didn't follow through. Look at the cascade slope. Guys, things cannot trade 90 degrees down and continue the trend forever. It's going to have to pull. So it's not uncommon after something like this to get what I call a J hook, right? A J hook right there. Pull up, retest. You've got to work that slope off. You've got to walk it over. You've got to have the rise run, just like your stairs in your house, right? Same thing there. So this gives you some solid places to play with to look at support resistance. When you see a really tiny green box on here, if it chews through that, there's not really much of an advantage for a trade there, for what it's worth. On the way back up here, 4 points, give or take 3.5, that might be worthwhile. But meanwhile, you're stuck in between here. Well, Scott, I can't trade that right now. Again, longer term setups there. And then Lucid. I haven't looked at Lucid in a while. So we're going to take the basically what works out to be the 6-month high at this point of this one. And you'll see. Okay. And then I'm going to take the more recent behavior out of this, just come off below right here. And I got one more thing I want to share with you before we get done today. I don't want to leave us out. So you can kind of see where she's trapped in between. Again, it starts to go through 1733, guys, and one bar it could chew through that. So I don't look at that and say, ooh, great trade. And that's not knocking the concept. This is the geometry of it. Okay. You have to evaluate it, but there'll be times down the road. Let's just say this did get back to 38, 39, and starts to fall through. All right, so I'm going to expect a little trouble, I don't know, right through there, and then definitely through here. But if they can get there, pause a little bit, get through here, and now I'm punching for 50, big psychology number, that's a pretty good trade with little risk. You could have 1 or 2 ATRs of risk around this down the road if it chews through and follows through, guys, and then you're going target, target, target. There's your R's with little risk. And that's a pretty good risk reward trade. We're not there, and I know we're not close to it right now. but I'm just putting the concept. Now, if I want to bring this one more level down, and then I got to show you guys something else before we get out of time. Now you can see another minor level in between here to here. So when I did this, a good example was Apple. When I would do this years ago, and I put the 2 free picks out every week, I did this with Apple, both long and short. And I would have multiples of these boxes with space in between them, just because the way the chart's set up. And somebody would put on risk. Let's just say they were trying to go long through here, and it would shoot through that, and it would go up to here, and so on, so on, so on. But you would know the levels as you're laddering up to where the problems would come. So if it starts to shoot through 22 and let's just say, 30, whatever, and that zone follows through, now you're looking for 26. It's not a very volatile stock. It's also basing, but it's also continue to make lower high, lower low. You don't just look at this by itself and just ignore common sense with it. I just want to make sure everybody's clear of that. Last thing before I forget, Sophie. If you're playing Sophie, if it hits 960, 64, 63, pay real close attention to that point. So that's going to be an area where the algorithms are going to come in and probably smash against pretty quickly, unless there's a news event with Sophie. If you didn't see the headlines on earnings, their forward guidance is saying we expect the consumer to continue to stay tapped out financially and jack their credit cards up. Basically, we are in a recession, basically, and we're going to benefit from it. So watch your pullbacks on this in the future, things like that. But if it can go to 964, and I'm saying that expeditiously, kind of quickly, you need to pay close attention. Okay, that's going to be a number to play with around that zone. 10's a big psychology number, but 964 is very much specific to the penny for a reason with this one. So there's that. Does that help? Is that good?
It's amazing. We've got time for probably just 1 or 2 more questions in the Zoom room here. And let me check Facebook, or not Facebook. I hate Facebook. Let me check YouTube. Hey, we got several people on YouTube. If you wouldn't mind taking a moment and liking the video, subscribe if you haven't done that already. That really helps us out and it costs you nothing. So I appreciate that. If you've got a question on YouTube, there's several of you in there. Go ahead and ask it and we'll get that answered here. We've got just a couple minutes left to wrap things up. Also, Chris and I have been innovating ways that we can continue to improve YouTube, add value. We want to be educational primarily, but we also want it to be fun and something you all enjoy. So if you guys have ideas of topics or things that you would like covered, we are open ears. We want to make sure we're serving you guys at the highest level. Just a couple other housekeeping issues here at TSU. I think if all the technology works, I believe I'm going to be able to teach a little masterclass here on YouTube tomorrow. I'm still putting those pieces together. Worst case scenario, I'll do it through the Zoom portal, but I know the YouTube experience isn't the best when Zoom kind of heads off the signal at the pass. It doesn't push through a high definition signal. So we're going to try to broadcast directly to YouTube, and that'll be a lot of fun. So that's coming up. And then also, you're going to start seeing emails about this if you're on the TSU email list. Next week, I'm launching a challenge. It's a little bit outside the trading world, but we're inviting our TSU audience to this. In fact, I'll look up a link here in just a second and put it in the chat pane. But it's called the Cash in Your Jeans Challenge. And candidly, it's scratching an itch that I have to teach broader principles beyond the stock market, more generational wealth, multiple streams of income. In many ways, it's the story of the path that I've walked to be able to enjoy the life that I have. And so the challenge is educational. It's a framework, but it's also actionable. And so we start off at the front end and say, the goal is to make at least $500 in the next week. Some people, I just did this about 3 weeks ago with them. Some people did the 500. Some people did over 1,000. Some people did significantly over $1,000. And it's kind of like, what you're going to put into it and what opportunities you're able to find at your fingertips. So it's both educational and practical. It's a lot of fun. I'll put that link here in the chat pane and would love to see you guys there. I'm going to let Chris and Scott answer any lingering questions while I find that link.
Just real quick, guys. If you go back to the YouTube videos, so when was this? When it was 6.9, 6.8, whenever we're talking about this right here, I guess it was 6.9, no, 6.8, somewhere right there. You can look at that and see how we broke this down before this all happened out, right? Again, and this is, I just want to talk just, I don't know, 90 seconds here on this. Now we got to get out of here, but realize where we are longer term. We're retesting this level. If you look at this one other way that I show everybody, not this one, just so everybody sees this really quick. Can I do it from here? Yep. So just realize, I've taught this before, we are inside this channel, right? And this comes back to what we were talking about earlier, like how am I going to handle this? It's a weekly chart. You can look left, you see resistance, it's been a problem in the past. If you look further left, you'll see us have problems over here, right? This is that zone of trouble through here, right? If you were to put a little box here, be patient with the market right now, okay? Right through there. You're fighting slope, fighting an arc, fighting resistance right here. And the arcing of this coming up is pretty sharp, like vertical, right? It's so put that in the back of your head. What if we do walk back down this and pull back some, and then we take off again and we have some bigger base structure? They're pretty cool, right? But you've sold off for 6 months. Right now, we've had some strength. If we start to chew through this at some point in the future, you have a waterfall right here. Okay. All that right there. We'll take this little thing out. Okay. Come out of the base structure at some point. If it sets up, you've got a waterfall climb right through here. You're fighting slope, but I'm just trying to tell you all that red right there, there's not people home right there. So it makes it easier. It's not an unfilled gap. And again, we've already addressed this as well as a refresher. We've talked about unfilled gaps. These on major averages, these become nice, easy trades for a lot of people. And this is played off right through here again. So you can find your targets. That was a waterfall decline. All this has been addressed through the prior videos. I'm telling you the same thing I teach, I talk about quite frequently at the Traction Group and Traction Pro. See it as it is, not as you want it to be. Trade what you see, maintain your stop discipline. Yes, there's unfilled gaps down here and here. At some point, we might fill them. Who knows when? Maybe in 2 years, maybe in 6 weeks, maybe in 2 days. But they do exist. Awareness is really key on your charts. Okay, that's it. How y'all have a great week ahead. Thanks, Josh. Thanks, Chris. I appreciate y'all.
Awesome. Really great show today, guys. Thank you for hanging out with us. Go ahead, like the video, send your questions in or recommendations of things you'd like to cover. And we're going to keep growing this little itty bitty trading channel. It's going to become something amazing. Blessings on each and every one of you. Chris, I'll let you have the last word today.
All right. Thank you guys for joining us. Hope you have a fantastic weekend. Don't forget to like and subscribe on YouTube, and we'll see you all next week.
See y'all.